Welcome to my 41st presentation for the team of finance and accounts professionals. This today's topic is 78 causes that can adversely impact the financial reporting of cash and cash equivalent in the balance sheet. Overall, this is my 72 presentation, 72nd presentation considering all YouTube presentation I have made so far. What I plan to include in this is what are the reporting requirements of cash and cash equivalent as per Schedule 6 to the Companies Act 1956 and Accounting Standard, types of the cash equivalents, summary of number of causes that can lead to the incorrect financial reporting as operational and unethical, and listing of causes that can impact financial reporting, both operational and ethical, for each one of the cash and cash equivalent, that is cash in hand, checks and DD in hand, balance with current accounts, balance with banks EEFC account, balance with the bank deposit accounts, balance with the banks others, and cash flow statement as a add-on. Types of cash and cash equivalent as prescribed by the this standard which I just mentioned, Schedule 6 to the Companies Act. These are cash in bank, checks in DD in hand, balance with the current accounts, balance with the bank EFC account, balance with the bank deposits, and bank balance with the bank's others. So this is an overview of this summary. This table has got 4 columns: serial number, head, operational related causes, and ethics related causes. For example, in the row number 1, cash in hand, 7 operational related causes have been identified that can adversely impact the financial reporting, and 5 ethics related causes have been identified which adversely affect the financial reporting. Similarly, for checks in DD in hand, 7 operational and 5 ethical causes. Balance with current account, 4 operational and 5 ethics related. Bank with EFC account, balance 9 operational and 8 ethics related causes, and so on and so forth. So total number of causes are 42 for operationals and 36 for ethics. Now, reporting requirement as per accounting standard 3. It deals with the providing information about an enterprise historical changes in the cash and cash equivalents through a cash flow statement that classifies cash flows during the period from operating, investing, and financial activities. I will be giving this, what all is included in this, in my subsequent slide. Reporting requirements. These are that general instruction. These are available in the general instruction attached to the revised Schedule 6, para 6.4, and it mandates following. Cash and cash equivalent shall be classified as per these heads which I have just already shared. Then earmark balance with the banks, for example, of unpaid dividends shall be separately stated. Balance with the banks to the extent held as margin money or security against the borrowing guaranteed other accountments shall be disclosed separately. Repatriation restrictions, if any, in respect to the cash and bank balance shall be separately stated, and bank deposits with more than 12 months of maturity shall be disclosed separately. Definition of cash and cash equivalent as per Schedule 6. Cash is defined to include cash on hand and demand deposit with banks. Cash equivalent are short-term, highly liquid investment that are readily convertible into known amounts of cash and subject to an insignificant risk of changes in the value. The standard further explains that an investment normally qualifies as a cash equivalent only when it has a short maturity of 3 months or less from the date of acquisition. Causes that can adversely impact the reporting of the cash in hand. These are operational causes are miscounting physical cash due to human error, improper tracking of cash advances or unrecorded expenses, inadequate reconciliation of petty cash with recorded amounts, processing errors for cash reporting, weak internal controls for receipt and payout of cash is one of the very significant important point. Inadequate security of cash, keeping in the locker, etc. Then incorrect reporting of type of foreign currency. Causes that can adversely impact ethical causes. Deliberate misreporting of the cash to inflate liquidity and fictitious records, hiding discrepancies in the physical cash through falsified records, unauthorized diversion of the cash for personal use, stealing of the cash by employees, embezzlement, a common phenomena in many organizations, and not disclosing cash and cash equivalents in the notes to the financial statements. Causes operational causes that can adversely impact reporting of checks DD in hand. 1. Recording stale or post-dated checks incorrectly, misclassifying of checks that have not been deposited, very common phenomena. Inadequate follow-up on dishonored or uncleared checks, including checks that cannot be honored and cashed as the maturity date is beyond the permitted statutory limit, usually 3 months. Weak internal controls of our receipts and payouts of checks, DDs, inadequate security of checks and DDs, inadequate segregation of duties for online banking activities for physical or online transactions. Ethical causes related to the checks DD. Deliberately holding undeposited checks to manipulate the cash flow reports, recording fictitious checks to inflate receivables or banks balances, misusing client issued checks for unauthorized transactions, creating fake records of check DDs, and embezzlement. Some employees might do fictitious signatures on check to be issued. Actually, it happened in my case. Somebody had 4 these signatures. Errors in reconciling bank statement with ledger balances, misrepresentation of the overdrafts, recording incorrect amounts for indirect debits or credits, oversetting of the current account balances. Intentionally delay in recording outgoing transactions to show inflated balances, manipulation of reconciliation statements to hide overdraft limits, falsification of the bank confirmations. Very important point, very important point, because this is required to be given to the statutory auditors often. Window dressing near the end of the accounting period, employees might divert funds from the current account for personal gains and manipulate records to conceal the theft. Also a very common thing. EFC account. What is an EFC account? In the context of India, it is a type of bank account that allows individuals in business to hold their foreign currency earnings. It is maintained in a foreign currencies like USD or Euro or GBP or any other for that matter, and is useful for exporters and individual earning foreign exchanges. The, the account helps avoid conversion losses and facilitates foreign currency transaction without converting into INR. This is very important. There can be alternate named accounts in other countries for similar purposes. Operational causes that can adversely impact reporting of EFC: exchange rate errors, bank reconciliation gaps, misclassification of the transactions, system failure, that is software or IT issues causing incorrect balance updates, human errors, currency mismatches, miscalculation of foreign currency balance due to exchange rate changes, incorrect record, and omission of fees or charges applied by the bank. Ethical causes are overstatement and understatement of the balances, unauthorized withdrawals, hiding funds, misreporting currency gains losses, fraudulent transactions, non-compliance with the regulations, particularly in the Indian context, due to the RBI related requirements, concealing unapproved withdrawals, and falsifies transaction to evade currency regulations. Balance with the operational causes that can adversely impact the reporting of balance with the bank's deposit accounts. Short-term fixed deposits are those with a maturity period of 3 months or less from the balance sheet. The date can be classified as cash equivalents. Incorrect classifying the causes are: 1. Incorrectly classifying bank deposits, including long-term fixed deposits, as short-term deposit, misclassifying short-term deposits as long-term, reconciliation errors, oversetting interest receivables, and ignoring auto-renewal clauses leading to incorrect classification. Subtle point, but important point. Ethical causes: over-reporting deposits to exaggerate financial stability, misusing fixed deposits as collateral without proper disclosures, colluding with the banks to generate false statements, and fictitious deposits. Operational causes related to the reporting of the bank others. Now, others may include short-term certificates of deposit, CDs, similar to the fixed deposits, with a maturity of 3 months or less from the balance sheet. They can be classified. Then escrow accounts, then prepaid debit cards. Subtle points but important points. Operational causes: inconsistent reporting of escrow or restricted funds, incorrect reporting of the CDs, not capturing temporary holds or blocks on accounts, very important point, omitting dormant accounts balances from the financial reports. Ethical causes: misusing funds held in trust or escrow for unauthorized purposes, not disclosing restriction on or encumbrances on the balances, misrepresentation of temporary funds as permanent assets, including liquidity assets like long-term certificates of deposits and fictitious balances. Now, this is a table which indicates the in three columns. The column number 1 is cash from which activity, 2 is inflow parameters, and column 3 is outflow parameters. There are 12 inflow parameters and 12 outflow parameters. So let's start with the cash flow from the business operation. This is the inflow parameters are sales relation from the customers, interest received, dividends received, and rentals income, etc. Outflow parameters are payout to vendors or employees or taxes or statutory fees and payouts, etc. Inflow from the investment activities are sale of assets, intangibles, company securities, divestitures, and loan repayments by borrowers. And outflow are purchase of assets, securities of other companies, acquisitions, investments made, and loan payouts. Financial activities are 3: sale of equity stocks, preferred shares, and bonds. Inflows from through these. And outflows are payout of dividends, buying of treasury stocks, bonds, and short-term debt parameters. These are the important parameters which influence cash flows overall. Causes that can adversely impact the reporting of cash flows. Operational causes: processing errors, again caused by IT or system, inaccuracies in the valuation and transaction amounts of inflows and outflows of these 24 parameters, inadequate segregation of duties for cash outflows, cash inflows, and their authorization, particularly cash outflows, not complying with the reporting requirements, inadequate reconciliation, compromise on the statutory requirement of AS3 for reporting. Ethical causes are deliberate misreporting and window dressing, fictitious entries, concealments, and falsifying transactions. Now, my second book was released in November 23, and this blog focuses on the 78 types of causes adversely impacting financial reporting of cash and cash equivalents and cash flows. I plan to come up with the third book sometime sometime next year. You can that will focus on the balance sheet strategies. You can refer to some of the articles of your interest on my website and Facebook and LinkedIn also. Just to share that with all this 72 this total blogs which I have posted on the YouTube, the total number of views has crossed 1.1 million YouTube plus Facebook, and the total number of hours viewed is now exceeding 15,500 hours for all this YouTube blogs. Thank you very much.